Hey everyone, in this video, we're discussing our top 5 trades to profit from the current market rotation. On our chart here, we've got the IWM overlaid with the QQQs, and you can see the IWM is up over 10% since the beginning of July, while the Qs, which is the orange line here, is down 3.93%. And this move really started here on July 11th, where the IWM had a huge gap up and the QQQs really started trending lower. This orange line, that's really the point where we started seeing the sell-off, mostly led by the semiconductors. And this move has really highlighted a big rotation that's going on in the market. And so we want to take a deep dive and look at exactly what sectors and what stocks are outperforming and underperforming in this market currently to see what type of trades we can profit from. So first, let's define what a market rotation is. A market rotation refers to the movement of investment capital from one sector, industry, or asset class into another within the financial markets. So in the chart we're just looking at, money is flowing out of tech, out of the QQQs, and into small caps over the last 2 weeks. This move has been highlighted by FundStrat's Tom Lee on CNBC, as well as a number of other market analysts, basically calling for a 15% rise in the IWM during the month of August and up to a 40 to 50% move in small caps by the end of the summer. But of course, we don't want to rely on market pundits for our analysis. We want to conduct our own research and analysis and really test the logic of our ideas. So before we jump into our trade ideas, we want to analyze 5 keys that will help us identify whether a rotation is taking place. Number 1, interest rates. Changes or expected changes in interest rates can prompt market rotations. And as a matter of fact, there is a large expectation in the market that the Fed will be cutting rates this fall. Number 2, inflation. Increases or decreases in inflation can lead to rotations into certain sectors and out of certain sectors. And in fact, the recent PCE data is showing that US inflation is cooling, increasing the odds of a September rate cut. Number 3, sector performance. If we just take a look at sector performance over the past week, we can see that money has been flowing out of consumer durables, out of electronic technology, tech services. And if we just filter by the monthly performance, we can see the same thing. Technology, services, electronic technology, all having negative performance over the past month. If we scroll down just to the end of this list, on the upside, we've got healthcare services up over 11%, consumer durables up over 9%, and financials up over 8%. So not only are we seeing this in individual sectors, but we're also seeing this in a broad section of the market, going back to our chart here on the IWM versus the QQQ. Number 4, earnings. Earnings have really shown a significant shift with names like Tesla and Google disappointing on their earnings, causing a sell-off in the QQQs. Meanwhile, sectors like financials, for example, Bank of America, JP Morgan, Goldman Sachs, all reported really great earnings for Q2 just a couple of weeks ago, further signifying a shift in the sector rotation. Number 5, geopolitical events. Things like trade tensions, wars, changes in government policies can all affect market rotation. So the market is currently hitting every single one of these key points. So if we expect these factors to continue on their current trajectory, then what are some of the trade ideas that we can use to profit from this continued market rotation? Number 1, long IWM. IWM is the small cap ETF of the Russell 2000. Here we're looking at our gamma exposure dashboard. If you're not familiar with gamma exposure, I'll put a link down to our playlist in the description below. But essentially, gamma exposure helps us to identify market concentration and also helps us to understand what option dealers are doing under the surface. These purple bars here are our gamma exposure levels, and we can see there's large gamma exposure concentration at the 224, 225, 230, and 235 strikes, signifying that market participants are bullish. And the temporary consolidation that we've been seeing over the past few days could be leading to a breakout into these higher strike prices in the coming weeks. We already have a bullish position on IWM, and we're looking at putting additional positions on in our educational portfolio in the coming days. One example of a trade idea is a low risk, high reward play on IWM. This would be something like a call debit spread targeting the 230 to 250 strikes heading into the September through October expirations. So this would give us exposure to be able to take advantage of continued capital flowing out of mega cap tech stocks and into small caps. If that trade continues, this is a fairly low risk, high reward type of play where we don't have to put a ton of capital outlay and we can capture significant upside momentum if it does take place. The next trade idea on our list is short semiconductors. And for this, we're going to start out with the SMH, which is the semiconductor ETF. Very easy to see the steep downtrend on SMH coming from the 280 strike all the way up here down to the 240 strike over the last few days. What's interesting though is we are seeing continued gamma exposure concentration at the 230 strike and lower. We just drag our chart up here a little bit. We can see that there are concentrations continuing even below the 230 strike down here at 220 and even further below. And so this is just telling us that market participants believe there is further downside to go in semiconductors. Number 3, long financials. If you recall earlier in the video, we were looking at the different performance across sectors over the last month, and financials being one of the leaders in the market over the last month, up over 8%. Q2 earnings reports across financials were doing relatively well. You can see here Bank of America, JP Morgan, Goldman Sachs, all getting a boost here around the middle of July. Goldman's had a really nice run since the beginning of July. It's pulled back just slightly, looks to be ramping again, is already tagging the 500 strike, which is a large gamma exposure concentration. And gamma exposure appears to be growing here into the 510 and 520 strikes. And so we like this for a continued momentum play over the coming weeks. This is a name that we're looking to add into our educational portfolio as well. By the way, you can check out our trading community Discord. We discuss all of these trade ideas as well as our educational portfolio on a daily basis. We have a really great active community of traders. Link in the description below. Number 4, long healthcare. The healthcare services sector led by UNH. Healthcare is up 11% in the past month. We actually have a long play in UNH currently in our educational portfolio, but there's several other names that also stand out in this list. If we just come over here, click on health services, we'll come over here to the performance. You can see United Healthcare blowing it out the past month, had a really great earnings report, but other names are doing well. Humana, Centene, a bunch of names that are possible contenders for continued long exposure. Number 5, the contrarian play. Now, if you followed us for very long, you know that we utilize an asymmetric risk-reward methodology as part of our overall trading strategy. And so this basically means that we take opportunities to go against our main bias, which currently is this rotation trade. And we use these contrarian plays in order to hedge our portfolio, or at least give ourselves opportunities to profit in different market scenarios that may not fit exactly with our main thesis. And so in this particular example, with the rotation trade that we are playing in our portfolio, this may mean actually going long a name like NVDA. NVDA, obviously one of the market laggards over the last few weeks, trading down from 135 all the way nearly tagging 105 a few days ago. Big market sell-off in just 2 weeks time. And so in a portfolio where we may be long small caps, short semiconductor, long various sectors that have been performing well as of late, we might throw in an additional play on a name like NVIDIA. In the case that our entire thesis is wrong, we don't want to completely blow up our portfolio. And so we want to be able to capture profits if there is a big swing back in the opposite direction. The way we would do this is structure a relatively inexpensive play on a name like NVIDIA. we could be targeting a move back into the 120 or maybe even 130 strike price in some sort of quick market snapback, for example. And we would try to put this trade on as cheaply as possible. This could be a butterfly strategy, a double diagonal. It could be a simple call debit spread. There's a number of ways to play this. The idea being we don't want to risk too much money, but we want it to have the ability to give us large profits in the case that there is a big snapback in the market. So these are our top 5 market rotation plays. If you're interested in checking out the tools and analytics on our dashboard, go to geeksoffinance.com. I'll put a link in the description below. Also, be sure to check out our trading community Discord. We've got a lot of great ideas in there, a lot of great traders sharing what they're doing on a daily basis. Something you definitely want to check out. Come join our community. I'll put a link down in the description below for that as well. Anyways, I hope you found value in this video and at least got a few ideas of different ways to look at the market. Thanks so much, everybody, for watching, and we will see you guys in the next video.